Good morning, everyone, and welcome to day three of our fast track classes. And thanks for turning up day after day, and that shows the commitment all of you have. If you're able to see the screen and hear my voice, just maybe put a comment or just give a thumbs up. That would help me know that yes, you're actually seeing. And by the time others join in, how are you feeling? Like this is the third day when you are getting up at 5:30 to attend classes. So how are you feeling? Are you all like sleepy? You know, so we are not used to getting up so early in the morning, but for the classes we are getting up. If you can just share your thoughts for a couple of minutes, that would help me. For me, it was not much of an adjustment. Normally, I used to get up between 5 and 5:30. Now for the classes, I have to get up at 5. Okay, so that I've set up all the things and we can go live at 5:30. And how are you feeling? Sleepy in the day because you're getting up early in the morning? Feel free to share. Good morning, Murli. Morning, Shivaji, Dagajib, Praveen. Morning, Shaisham. Okay, it's amazing. Great. Motivated and adds and gives a direction for FR preparation to revise it. And that is the exact purpose, so that you can revise and complete whatever can be completed in the time frame that we have decided. And one question what students have been asking me again and again, sir, is this a replacement of full-fledged class? It's not a replacement, it is more like a supplement. Okay, so don't think that only I will do this, pass the exam and my life is set. You should back it up with proper in-depth study, especially for those of you who are writing after November 23. So how do we get in-depth study? Up to you. You can choose to do self-study or you can enroll for any classes. That is purely up to you. This is to give you a mindset and for also for the first time readers to understand that what are you going to learn as a part of financial reporting, right, at a CA final. That is what you would be, the objective of the entire setup is. And what others are saying, it is cold in Bangalore, but energized for classes. Shiki Joshi is good. And it's been raining bad, crazy in Hyderabad for the last 2 days. So schools are off today and tomorrow. We need to decide what we have to do for our office. It's really cold and it's raining like anything. It's raining like anything here. Morning wake up is going success. Good. And I think after 20-21 days you will automatically get into this habit of getting up early, and once that happens, you I hope it will also help in preparation for other subjects. Just give me a moment, let me set up the So till yesterday we completed the conceptual part of lease modification. We have also understood what do we do, when it comes to measurement aspect. That also we have discussed. Right. Those of you who are joining in for the first time, you can download these notes from our app. After the class, you can download. The link is given in the description. And we have understood this part that whenever there is a lease modification, you need to ask two questions. One is whether there is an increase in scope. If there is an increase in scope, then the additional right or the additional scope, if it is commensurate with the price or the price is commensurate with the additional scope, then it is a separate lease accounting. No sir, there is an increase in scope but the price is not commensurate, then in that case you will do the remeasurement where you will have no impact on P&L. And the third scenario is when there is an increase in scope, where there is not an increase in scope, decrease in scope, then you will remeasure the lease liability, you will reduce the ROU asset proportionately, and difference will be charged to P&L. Right. Now we will do a question based on lease modification. It's such a big standard, it's very difficult sometimes to search for question also. Yeah. So let's have a look at this. I hope the screen is visible. Yeah, it's visible. Lessee enters into a 10-year lease for 5,000 square meter of office space. So the lease is entered into for 5,000 square meters. The annual payments are 100,000, 1 lakh payable at the end of each year. The interest rate implicit in the lease cannot be readily determined, which means we will take the incremental borrowing rate. The lessee's incremental borrowing rate at the commencement date is 6%. At the beginning of year 7, lessor and lessee agreed to amend the original lease, extending the contractual lease term by 4 years. Now, extending the lease term is also increasing the scope. The annual lease payments are unchanged from 1 lakh, that is, whatever is payable is also payable now. Now, tell me one thing. I have increased the scope, but did the price increase in this scenario? I have increased the scope, but did the price increase in this scenario? The price did not increase, which means when the price did not increase, so price of additional right is commensurate with increase in scope. It is not. So what will we do? We will remeasure the lease liability and adjust the ROU accordingly, right? So how do we do that? Let us see. For detailed computation, I will be using Excel, and today I have my writing pad also connected, and using that we will do remaining aspects. Okay, so here what has happened is the lessee has entered into a 10-year lease. So original lease is 10 years, or I'll just show it visually once. So just a moment. Original lease is for 10-year period or for 5,000 square meters, and then they have extended. Okay, they have extended the lease term from 7 years to 14 years. Now, I told you that initially when I told you that it is not commensurate, but I think I made a mistake there because I was thinking about increase in area. I was thinking about increase in area, but here it is not increase in area, it is increase in term. So even if the term has increased, the rent remains the same because the space remains the same. Here the space is not additional. So it's connected. So in this case, what I initially read it directly and I made a mistake in interpretation. So we have 5,000 SFT. We have 5,000 SFT, and this 5,000 SFT remains as it is. So the thing that is charged 100,000 or 1 lakh per month, whatever is the rent, this will continue from year 7 to year 14. So increase in scope, price is also commensurate. Okay, so increase in scope, price is also commensurate. But if I tell you that this 5,000 became 7,000 SFT, 5,000 became 7,000 SFT, and price doesn't change, price remains to be 100,000 or 1 lakh, then in that case, or it increases from, let us say, 1 lakh to 1 lakh 5,000. So yesterday a lot of you are asking what is not commensurate. From 5,000, if I am paying 1 lakh, for 7,000 I should at least pay 1 lakh 40,000. 5,000 into 20, 7,000 into 20. This is how much I should pay. Or I may get some discount because I have been a long-term tenant. I may get some discount, which is 140 minus, let us say, 5% discount. That is still okay. But if it remains to be 1 lakh, if it remains to be 1 lakh, or if it improves from 1 lakh to 1 lakh 5,000, then I cannot say that it is increases commensurate. Okay, so that is one understanding of what we need to have in this case. Now here the price is commensurate. The price of additional right is commensurate with increase in scope, and we will do it as a separate lease accounting. Okay, so original lease term is 7 years. Now after 7 years we are paying till 14 years. So what you need to understand, or you need to count the number of years, that is from 7 years to 14 years. 7, 8, 9, 10, 11, 12, 13, 14. A lot of time what happens is we do 14 minus 7. We do 14 minus 7 and we say 7 years. No, it is 8 years because we are beginning the 7th year. So what are the lease payment? Lease payment is $100,000. Lease payment is 100,000. Now when lease payment is 100,000, term is 8 years. So all of you can use a calculator. 1 divided by, what is the rate now? The rate as per the question is revised to 7%. So you can use 7%, 1 divided by 1.07, 8 times and get to the number. Now how much will that be? That will be, you can do it parallelly alongside with your calculator. 7% for 8 years, payment of 1, what I get is 59713. So present value of lease payment is 1 lakh into 5.9713, which is 597,129. 597,129. There could be a rounding off difference if you are writing 3 decimals or 2 decimals, or if you are writing each payment separately and doing the total. Okay, so the present value of lease payment in this case is 597,129 or 597,130, rounded off, or you can round it off to 100 also. Now what does this indicate? This indicates my lease liability. This indicates my lease liability for the remaining 8-year period. So the new lease liability is 597,100. Okay, this is the new lease liability. Now this is revised. What was original? Original lease payment was also 100,000. Term was 10 years. Term was 10 years because we had taken the lease contract for 10 years. Now what is the present value? Again, 1 divided by 1.08. You can continue to do for 10 periods and do the grand total. So for 10 years it would be 7.0236, that is 7,02,350. But here I think we have the rate to be 6%. So I'll write it here. Revise is 7%. Original is 6%. So I have to use 6% as my factor, which is 6. So the present value comes to 7,36,000. The old lease liability 7,36,123. Okay. Now this is what was original. This is revision at the beginning of the 7th year. Now the original lease liability we will amortize using the effective interest. So here opening balance, interest at 6%, payment, closing balance. This is one format which I want all of you to remember so that in the examination, the moment you get the question, any question like this, the moment you get a question based on lease, subsequently we will use this in financial liabilities also, amortized cost method. Whenever, or financial asset also in case of amortized cost method, whenever you see that, this table should kick in your mind. Okay. Now lease liability 1, 2, 3, 4, 5, 6, 7. I'll not go to the 7th year because in the beginning of the 7th year it has changed. So I need only till 6 years. Opening balance is 7,36,000. Opening balance is 7,36,000. Interest at the rate of 6% is 44,160 and we are paying 1 lakh. So opening balance plus interest minus payment gives me 680,160. Don't worry about, sir, we are doing it in Excel and it is going faster. We are not able to do it simultaneously. Understand the concept. Excel backup is given to you. After the class, you can revise how the numbers have been calculated. Okay. Then 680,160 is the opening balance. Interest 44. Payment 1 lakh. Closing balance 620. Like this, we can do for all 6 years. And at the end of the 6th year, what we can see here is that the balance is 346,498 or 346,500. Now this may be slightly different from what is given in the study material because they have used a different rounding. Okay. In examination, what you can do is you can use 3 digits rounding or 4 digits rounding and give an assumption. Okay. Give an assumption that we have used 4 digits. Increase in area illustration 33. Yes, we'll do that also. I'll do both them because modification is one of the most important parameters or one of the important aspect which is confusing for the students. See, I also got confused early in the morning in half sleep. I read that increase in term is not increase in scope. Is not commensurate. Okay, so it can happen. So we'll cover both. Now 346,498 is the closing balance. This is one way to calculate. There is another way to calculate which you can use in the examination if you are comfortable. Sir, what is the other way? See, original lease term is 10 years. Remaining term is 4 years. So basically, please understand, please listen to this very, very carefully. A lot of you may not be aware of this. The study material does not teach you this. Maybe in a couple of questions they may be using, but this is more logical. Now my remaining term is 4 years, means my lease liability is what? My lease liability is present value of 1 lakh for 4 years at 6%. Okay, so present value of 1 lakh at 6%, if I do, I will get the lease liability. How much is that? Present value factor I'll calculate at 6% for 4 years for minus 1, that is 347. If I multiply 1 lakh with this 3.47, whatever is the number that comes, it is 346,510. 346,510. So why difference? Because here I used 736. Here I had calculated 736,008. That is what is causing the slight difference. So short, quick way to calculate the amortization. But in examination, please do the actual table, because they will give you marks. 2 to 3 marks would be mentioned for that. So that is what you should not try to do. But yes, for the first time calculating lease liability, you can directly calculate the present value and get it done. Now we have the lease liability at 346,498. That is our closing balance. That is our closing balance. Now, if we come back, just a second. If there is increase in scope, price is commensurate with increase in scope, we'll account for it as a separate lease. But here, increase in term has happened. We have not got additional right. We have got increase in term. So when there is an increase in scope, which is only increase in term, we will remeasure the liability using the revised discount rate. So here, term has increased, but did I get additional asset? I did not get additional asset. What has happened? Term has increased. So when term has increased, means I have got additional right. Okay, I have got additional right to use the asset, but just the term has increased. My area of asset has not increased. So in that case, what will I do? I will remeasure the lease liability and I will adjust the ROU asset. So here, my original lease liability is 736 minus, sorry, original lease liability is 346. Revised lease liability is 736. So in that case, my additional liability is 736 minus 346, which is 380. 389,489. No, sorry. Original revised lease liability is 597. So revised lease liability is 597,130. Revised lease liability is 597,130. Original lease liability is 346,510. The additional liability is 250,619. So you will debit lease liability. Sorry, you will debit ROU asset and you will credit lease liability. Okay. Now, somebody had asked me illustration number 33. Illustration number 33. Lessee enters into a 10-year lease for 2000 square meters of office space. At the beginning of year 6, lessee and lessor agree to amend the original lease for the remaining 5 years to include additional 3000 square meters of office space in the same building. The additional space is made available for the use by the lessee at the end of the second quarter of year 6. So, 10-year lease, initially 2000 square meters of office space. At the beginning of year 6, they agree to amend the original lease for the remaining 5 years to include an additional 3000 square meters of office space in the same building. So additional 3000 square meters of office space in the same building is included, and the space is made available for the lessee at the end of the second quarter of year 6. The increase in the total consideration for the lease is commensurate with the current market rate for the new 3000 square meters of office space, adjusted for the discount that the lessee receives, in reflecting that the lessor does not incur cost that it would otherwise have incurred if leasing the same space to a new tenant. So here what has happened is similar to the example what I have given. Here if you see 5000 SFT. So in this particular question, it's not 5000 SFT, it is 2000 square meters. This 2000 square meters has now been changed to 2000 plus 3000, which means additional ROU asset. Okay, additional right of use asset. Now, when there is an additional right of use asset, you have to check, sir, is the price commensurate? If it is yes, then you will account for it as a separate lease. Sir, but here they gave a discount. They gave a discount because the lessor does not have to hire any broker or agent to get a new tenant. So when they pass on that normal discount, then in that case, it is still considered to be commensurate, and hence you will recognize a separate ROU asset and a lease liability for the additional area that has been obtained. Okay, so if the price is commensurate, you will account for it as a separate lease. Now coming back to our discussion, you should apply this table, increase in scope, whenever there is an additional right of use asset. Only then you will apply this table. Otherwise there can be some kind of confusion as to how do we account for these modification. So only when the additional scope is there, that is area has increased, has the price increased commensurately, then in that case you will consider that okay, the scope has increased, new asset has come in, and price is commensurate, separate lease liability. Scope has increased, price is not commensurate, you will remeasure the lease liability. Whenever there is changes in lease term and all of that, you can apply the remeasurement directly. Okay, so whenever there is a remeasurement, lease term has changed, so you can apply this table directly so that there is no confusion. Okay, so remeasurement term related, you can apply this particular table. Then modification, additional scope, when it comes into, you can apply this particular chart that I have given on the screen. Now let's look at one more question so that we are clear with how do we account for lease modifications. Here, lessee enters into a 10-year lease for 5000 square meters of office space. The annual lease payments are 50,000 payable at the end of each year. The interest rate implicit in the lease cannot be readily determined. Incremental borrowing is 6%, you will use 6%. At the beginning of year 6, lessor and lessee agree to amend the original lease to reduce the office space. Now here, is there an increase? No, there is a decrease. If there is an increase, we will follow this guidance. If there is a decrease, you will follow this particular guidance. So here there is a decrease to how much? From 5,000 to 2,500 of the original space, starting from the end of the first quarter of year 6. So whenever they say end of the first quarter, you can assume beginning of the, so here they have said end of the first quarter itself, okay, of year 6. Fine. The annual lease payments from year 6 to year 10 are 30,000, and the lessee's incremental borrowing rate at the beginning of year 6 is 5%. Now here this is slightly confusing. We'll assume that this is the beginning of the year 6 where they have done the changes. Okay, actually they have said original space starting from the end of the first quarter. So in the first quarter changes happened. Annual lease payment effective end of year 6, you will start paying 30,000. incremental borrowing rate is 5%. How should the modification be accounted for, right? So now here, original $5,000 and $50,000 is the rent. Revised is 2,500 and rent is 30,000. Okay, these two numbers are given to us in the question. Then it is a 10-year lease. It is a 10-year lease, and the discount rate, original discount rate is 6%. Revised discount rate is 5%. Right? Now, how do we account for it? First, original lease. You have to calculate what is the lease liability. Lease liability is equal to present value of 50,000 at 6% for 10 years. Present value of 50,000 at 6% for 10 years. So we can calculate the present value factor again. 1 divided by 1.06, 10 times. So present value of 6%, 10 years, payment, use -1, 7360. So that is 50,000 into 7360. So this gives 7.360. So this gives me the lease liability at the beginning. It gives me the lease liability at the beginning. Now, with this lease liability, I have to calculate what will be my closing lease liability at end of year 5. Sir, why at end of year 5? Because in year 6, there is a modification. In year 6, there is a modification. So at the end of year 5, what is the closing lease liability? Take the year, opening balance, interest at 6%, payment, closing balance. So 368,123, that's 1, 368,123, interest at 6%, payment 50,000, closing balance, opening balance plus interest minus payment, which is 340,000. Okay, that is the first part. Then second year, third year, fourth year, fifth year, we need for 5 years. Opening balance, interest, payment, closing balance. So if you do this, you get 2,10,612. 2,10,612 at the end of 5th year. This is my lease liability. This is my lease liability. Okay. Now, I also, because there is a reduction in scope, So if you just come back to this table, because there is a reduction in scope, then we will remeasure the liability using the revised discount rate that we will do. ROU asset also should be reduced proportionately. Now, sir, what is the meaning of reduction of right of use asset proportionately? Think of it. I have 5,000 SFT or square meters. I gave back 50%. Half of it I have given back. So whatever is my ROU asset, that also needs to be reduced by 50%. I need to bring down my ROU asset by 50%. So whatever is the portion surrendered, proportionately I have to reduce the right of use asset. So for that I need to calculate ROU asset at end of year 5. Now how do I calculate that? ROU asset was 368,000. Amortization is 368,000 divided by 10. divided by 10, I get 36,800. That is amortization for 1 year. Sorry, I didn't share the screen. Just a second. Yeah. ROU asset beginning balance is 368,000. ROU asset amortized per year is 36,800 because it is a 10-year lease. 10-year only, no? Yes, 10-year lease. So amortization for 5 years is 368 into 5. How much? 184,000. 368 into 5, 184,000. So closing balance 368 minus 184. What I get is 184,000 to be the closing balance. Okay. Now we have revised the lease. Revised is what? Rent 30,000, term 5 years, rate 5%. Present value factor now will be present value of, you can do 1 divided by 1.05 equal to 5 times and grand total 5%, number of period 5 for -1. We get 433 or 43295. So present value is 30,000 into 43295, that is 129,884. 129,884 is the revised lease payment or revised lease liability. Right now, what we need to do is we need to proportionately see. Right of use asset is 184. Right of use asset is 184. That 184 has to be reduced. That 184 has to be reduced by 50%. So, since 2,500 square meters is surrendered, we need to reduce ROU proportionately. Right now, proportionately meaning whatever is the ROU asset before modification, before the lease modification, it has to be proportionately reduced. Now proportionately means what? 2,500 out of 5,000. So ROU asset is 2,500, what we have retained, whatever we have retained, divided by 5,000 into the closing balance 184. So how much have we retained? That is the question we need to ask. That is 92,000 is the right of use asset that we have retained. So ROU asset should go down. ROU asset should be reduced by 92,000. That is 184 what we have minus 92 what we have surrendered. 92,000 is reduction in right of use asset, right? Then what is the reduction in liability? Reduction in liability is our closing balance is 210 minus, now the liability is 129. So this is original liability minus revised liability. Okay, so reduction in right of use asset is 92,000. Reduction in lease liability is 80,728. Okay, now if that has happened, if it has changed by so much, then what is the gain or loss that we need to recognize? So here if you see, reduction in ROU asset is 92,000. Reduction in lease liability is 80,000. The difference between these two, 11,271. That is the net difference. Now, sir, what is this net difference mean? See, visualize the scenario. I reduced the asset by 92,000, but my liability reduced by only 80,000. So I gave up 92,000 of asset, I gave up 80,000 of liability. The net reduction is 11,000, means I gave more asset than I gave my liability, which means there is a loss. This loss has to be recognized in the P&L. This loss has to be recognized in the P&L, right? So this is how we account for modification when there is a reduction in scope. Okay. Any question on this? Because it has been a long illustration that I've been solving, and I think I've solved it at a very decent slow speed. Okay. Excel link I will share in the group. You are a part of the group. You will get it in the group, Rajib. I'll share the link for it. Okay. Yes. Okay. Any confusion? Any question in this? Students, feel free to ask, because only then we'll be able to, proceed further. Otherwise, we'll not be able to proceed further. Okay. Now, one last time coming back, there could be some confusion because of two types of modifications and measurement that we need to do. So, whenever we say we have to remeasure the lease liability, it will happen when there is a reassessment of lease term, when the lease term has changed. The first example that we did today, okay. So there also in a flow, I told it that there is a additional ROU. No, the ROU is same. ROU did not change in that case. So when there is a reassessment of lease term, or when there is a reassessment of purchased option, you use the revised discount rate and remeasure. Or when there are other changes, you use the original discount rate and remeasure. So this is one thing you have to keep in mind. Whenever there is a remeasurement, there is no P&L that is recognized. Okay. Then subsequently, modification, when we talk about, whenever we say account for lease modification, if there is increase in scope, means I am getting something new, additional asset, and if the price is commensurate, separate lease. If the price is not commensurate, remeasure the lease liability. Then if there is a reduction in scope, remeasure the liability, reduce the ROU asset, proportionately difference will be charged to P&L, right? So this is the crux of remeasurement and modification. So whenever you see additional ROU asset or reduction in ROU asset, you will apply this particular chart, and whenever you see other cases of modification or remeasurement requirement, that point of time you will apply this particular chart. When we say scope, what all are included apart from area or term? Can you give some example? So here we have some example. Modification. So generally these are the things what we see when there is a lease modification: extending the term, terminating the term that is related to the lease, then timing of lease payment. So sometimes what happens is, sir, you have taken a property on lease, and when you have taken a property on lease, what happens is you are not able to pay now. You are paying subsequently. So the timing of the lease payment, that changes. So that is one case when there can be a lease modification. Then you take a new right of use asset, or you surrender a part of asset. So basically, whenever we look at a subject matter, whenever we look at a lease, what is a lease? At the end, lease is a contract which gives us right to use an asset for a given period of time for a specified consideration. So the asset can change, the time can change, the payment can change. That is what would be lease modification. Now here illustration 36 covers a modification that is a change in consideration only. So change in consideration only means what? They have revised the consideration. So lessee enters into a 10-year lease, same 5,000 SFT, okay, square meters, sorry. At the beginning of year 6, lessee and lessor agree to amend the original lease for the remaining 5 years to change the lease payment from 1 lakh to 95,000. Interest rate implicit in the lease cannot be readily determined. Lessee's incremental borrowing rate is 6%. Lessee's incremental borrowing rate at the beginning of year 6 is 7%. The annual lease payments are made at the end of each year. Now, how should the modification be accounted for? Now first you will calculate what is the closing balance as per the existing lease 421,090. So this we have also calculated in one of the question, 421,224 in the previous question. So there is some rounding of difference here, 421,090. Then now on the date of modification, we will remeasure the lease liability for the remaining 5 terms, because now payments have been revised. So you will reduce the payment by what? To 95,000, and now my rate has changed. So I'll use the 7% rate to calculate. So 95,000, 7% for 5 years, my lease liability becomes 389,500. 389,500. Now whatever is this difference, 389 and 421, that you will consider 389 and 421, the difference you will make an adjustment to right of use asset. This will not be recognized in P&L. The difference will not be recognized in P&L. You will just reduce the liability and change the right of use asset. You can let's have a look at illustration 37. Modification that both increases and decreases the scope of the asset. So the lessee enters into a 10-year lease for 200 square meters of office space. Annual lease payment are 100,000. Payable at the end of each year. Interest rate implicit cannot be determined. Borrowing cost, incremental borrowing rate is 6%. So you will use 6%. At the beginning of year 6, the lessor and lessee agree to amend the original lease to include an additional 1500 square meters of office space in the same building, and they reduce the lease term from 10 years to 8 years. So what has happened here? You have added one right of use asset and you have reduced the term from 10 to 8 years. The annual fixed payment for 3,500 square meters is 1,50,000 payable at the end of each year. So annual fixed payment for the 3,500 square meter is 1,50,000 payable at end of each year from year 6 to year 8. Lessee's incremental borrowing rate is 7%. The consideration for the increase in scope is not commensurate with the standalone price for the increase adjusted to reflect the circumstances of the contract. Now what is the meaning of this? So if you see, just show this to you on the pad. Now what has happened here is, this particular contract, original contract is for 2000 square meters. For 2000 square meters they were paying 1 lakh. That is what the question says. For 2000 square meters they were paying 1 lakh. Okay. Now they have included 1500 added. Now when you add, see, for 2000 if you are paying 1 lakh, means per square meter you are paying 1 lakh divided by 2000, 50, 5 2s are 10, yeah, 50. Now for 1500 additional square meters you should pay 1500 into 50, that is 75,000. So the total should be 1,75,000. This is what is commensurate. Okay. Now because we are getting it at 1,50,000 and the question specifically tells here that this 1,50,000 is not commensurate. 1,50,000 is not commensurate with the standalone price for that particular increase. So in that case we do not account for it as a separate contract. Now if it is something which is commensurate, then there is no problem. Directly we can account for it using the account for it as a separate lease contract, right? Now again, opening balance, Opening balance is 735,900. We have already calculated in the previous problem. Originally, you will account for it at 6% because that is the rate which is given in the question. Original rate is 6%. So originally, when you calculate using 6%, 73, 6%, you calculate, you get the closing lease liability as 421 and ROU asset depreciated to 367,950. Okay, this we have done in 2-3 problems. If you have any confusion, you can practice it back at home. I'm trying to explain you the flow of the solution. So you will calculate what is the closing balance of lease liability 421 and ROU asset 367. Now, when the modification happened at the beginning of year 6, what did we say? We say it is a 3-year period now. Earlier it was a 10-year period. Now we have revised it to balance 3-year period only. So there is a 3-year term. Payment of 1,50,000 and incremental borrowing rate of 7%. So considering that the present value of lease payment is 3,93,600. Okay, 1,50,000 discounted at 7%. For 3 years, you get 3,93,600. This is my revised lease liability. This is my revised lease liability. Now, I'll just show this working on Excel so that it is easy for us to understand. So in this particular case, closing lease liability, the closing lease liability, original closing lease liability is 421,090, or when we have done, I think we got 421,100 or something, right? Then ROU asset on that date is how much? ROU asset on that date is 367,950. Now here two things have happened. So what are those two things? There is a increase in scope because you are getting a new asset, and because of the increase in scope, my payments have changed to revised lease liability is 393,600. Now, how did we get 393,600? That is present value of 1,50,000 for, present value at the revised rate is 7%, present value at 7% for 3 years for a payment of 150,123. You get 393,647. Please remember, I am using this Excel to calculate so that we can cover more concept in the limited fast track time. Okay. In the examination, you can use your calculator and you will calculate. It will take a minute extra, nothing more than that. So 393,600, that is the revised lease liability, right? Now, 393,600, whatever has happened, 393,600 is whatever is the revised lease liability. Now, what does this indicate? See, this indicates that originally, if just think of it, if payment was 1,000 or 100, 1 lakh, then lease liability would have been how much for 3-year period? Present value at 7% for 3 years, 1 lakh. If I do this, it would have been 262,431 if payment was 1 lakh. If payment was 1 lakh, it would have been 262,431. Okay, at 6%. At 7%, this revised payment would be this is at 6%. At 6%, it would have been 267,301. That is a change of 126,298. And at 7%, that is 131. Okay, now out of this 393, 131 relates to original payment of 1 lakh. Okay, original payment of 1 lakh discounted, and balance portion relates to your 50,000 which is extra, that is paid. That is just a breakup. You don't need to worry about understanding, how did that number come and all of that. For accounting purpose, it does not change. Okay, so basically 393 is your total liability. Out of that, if for 1 lakh payment, my liability would have been 262,431, and the balance, which 131 168 represents that we have increased the payment by 50,000. That is just for us to understand the breakup of what has happened. Right now, for 1 lakh, for 50,000. 50,000 is because the additional amount that is being paid. Right now, closing balance of lease liability, originally what we had calculated was how much? Closing balance of lease liability is 421,090. The closing balance of lease liability is 421,090. Now, if we continue paying 1 lakh, my lease liability would have been 262,431. So the difference between these two is 158,650. But here this is at 6%. So what we should find out is, out of this 421,090 at 6%, how much is my lease liability at 6%? 267,301. So the difference between these two, 153,788, this difference is what represents the reduction in lease liability because of reduction in term. Okay, so if I just have to explain you on the screen, originally I had 1 lakh, right? This 1 lakh payment that was to be made, this 1 lakh payment had to be made for what period? For 10 years period. So please pay attention. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's visible? Yeah, it's visible. So from year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 10 years you have to pay how much? 1 lakh. And considering this 1 lakh, my closing lease liability, what we had calculated, is 421,090. This is when, this is at the end of year 5. So year 1 is completed, 2, 3, 4, 5. Here the closing liability is 421,090. This is considering what? 1 lakh at 6% for 5 years. Now this 5 year is no longer 5 year. This 5 year is no longer 5 year, because 1, 2, 3, 4, 5. This is no longer 5 years, because we have cut it down. 9 and 10 is out. So we need to know for these 3 years what should be the lease liability for 1 lakh. So 1 lakh at 6% for 3 years is how much? Right. So 1 lakh at 6% for 3 years is 2,67,301 or 300. Sir, how did we calculate? I'll just show you back the screen so that you can understand this. 6%. Basically, I am saying that if I continue to pay 1 lakh, if I continue to pay 1 lakh for the remaining 3 years period, and my original liability was calculated at 6%, out of that, how much liability have I retained? I have retained 267,301. I have retained 267,301. Then out of my 421,090, I have 267,301, which means this minus this. So 421,090 minus 267,301, that is 267,301, that is 153,789 is the reduction in liability. My existing contract, I am not yet accounting for the increase in scope. My existing contract, the liability has reduced by 153,789. Is that clear? Is that clear? Any question? Okay, great. Fine. Now, my liability has reduced by 153,789 and my ROU asset, whatever I am carrying, this is also for 5 years period. But now my ROU asset has to come down from 5 years to 3 years. So what we'll do is whatever ROU asset we have, so the ROU asset we have is, let me just check the calculation. The ROU asset we have is for 5 years, it is 367,950. So how did we calculate that? You can take the present value of lease liability, that is ROU asset, amortize it for 5 years, you get 367,950. Okay. Now this ROU asset, which is 367,950, is for 5 years. So for 3 years, it will be 367,950 into 3 divided by 5, which is 367,950 into 3 divided by 5, which is 220,770. So my ROU asset for the remaining period is 220,770. Right. Now, what is the reduction? 367 to 220. Reduction is equal to 367,950 minus 220,770, that is 147,180. So the reduction in ROU asset, there is a reduction in scope because the term has been reduced. Earlier I would use it for 5 more years. Now I am using only for 3 years. So my term has reduced. When my term has reduced, my reduction in right of use asset is 147,180. My liability has gone down by 153,789. My asset has come down by 147,180, means more liability, reduction in liability is higher than reduction in asset. So is it a gain or a loss? it is a gain. So that gain will be recognized. So whatever is the difference between these two, 153,789 minus 147,180, this is the gain. 153,789 minus 147,180, the gain will be recognized of 6,609 of gain is recognized with this transaction. Okay, now we have considered here lease liability at 6%. Now when I am doing all this adjustment, my discount rate has also changed to 7%. My lease term has changed. When my lease term has changed, my discount rate has also changed. Correct? When my lease term has changed and when my discount rate has changed, my discount rate I will use is revised discount rate. Now if I use the revised discount rate, whatever we have calculated here, at 7%, what we calculated, it is 262,431, means the liability has gone down further. The liability has gone down further. So what is the liability amount which has gone down? See, at 6% for 1 lakh for 3 years, my liability is equal to 267,301. And I have calculated my ROU asset to be 220,770. Okay, this is what you have calculated. But my lease term has reduced. So see, there are two things that are happening. One, my lease term has reduced. Second thing that is happening is that my payment has changed. My increase, there is an increase in space. Right now we are talking about what will happen when my lease term has been reduced. So when the lease term has been reduced, this is one impact. Now I will do all the calculations considering 7%. So if I do 7%, it is coming out to be 262,431. So 267 to 262, if I do the difference, minus 262,431, it comes out to 4,870. So this also is a reduction. This is a reduction in my liability. So this reduction in liability will also be recognized by reducing the liability and correspondingly reducing the ROU asset by 4,870. Sir, this is getting confusing. Sir, why is it getting confusing? Because we are doing two time the modification. One is the reduction in tenure. So we have reduced the right of use asset. Second, what are we doing? We are remeasuring the lease liability because we are reflecting the revised discount rate. So that is why we are doing two adjustments. One, to showcase that there is a reduction in ROU asset proportionately, and the second one is the reflection of the revised discount rate, 6% to 7%. Any doubt before we look at the the increase in scope part with related to excess area? This is with related to your reduction in tenure. Now we will look at in the part related to additional space. Journal entry, debit liability 4870, credit ROU asset 4870 for this one. The other one, journal entry, this you will debit to lease liability, credit asset gain will go to P&L. So see, because there are multiple things happening simultaneously, step by step we need to approach. Sure, I'll revise the flow of the solution. So now here what we have to understand is, so far whatever we have discussed, we initially took a 10-year thing. This 10-year has now been reduced to 8-year. 8-year has happened, then 6% increase to 7%. This is another thing that has happened. Then from this, in this 8-year, there is also additional 1500 ROU. This 1500 ROU we have not yet discussed. What we have discussed, from reduction in your space. Reduction in your space. Okay. Now reduction in your space is from 10 years to 8 years. 10 years to 8 years. That is how much of liability is surrendered and how much of asset is surrendered. This we calculated at 6%. The difference was recognized in P&L, and now because the rate has changed to 7%, that impact we gave separately to adjust the ROU asset and lease liability. Right. Now, coming to the modification part, where there is a increase in the leased space. Now, increased in the lease space is what? 50,000. The amount that is additionally asked is 50,000. Correct? 50,000 is the increase in leased space. Now, when 50,000 is increased in the leased space value, this is the amount paid. Amount paid 50,000. This for 7% for 3 years. 50,000 7% 3 years. Present value works out to, you have calculated 131. Sorry, 168. 131, 168. This is the lease liability for the additional space. Now, lease liability for the additional space, because there is an increase in scope. There is an increase in scope, and the increase in scope is the price commensurate. The price is not commensurate. If the price is not commensurate, what we simply do is increase the lease liability by 131, 168 and increase the right of use asset by 131, 168. So very simple calculation. Increase the lease liability by 131, 168 and increase the right of use asset by 131, 168. So for this, you will credit lease liability and debit the right of use asset. Now, I know there is a lot of complications in this particular question. Let us try to summarize everything and do the simplified working. Okay. First, closing balance of lease liability. Closing balance of lease liability, what we have originally calculated, 421,090. Second, revised liability for 3 years at 6% is 267,301. At 7% is 262,431. Now what I'll do is I'll show you the other way to work it out. Okay, closing balance of lease liability is 421,090. Revised liability for 3 years, this is at 6%. This is at 7%. for 1 lakh is 262,431. The revised liability for the balance 3 years is 262,431. Okay. Now, first what we need to do is, and at 6%, revised liability for 3 years is how much? Is 267,301. Okay. First what we need to do is, we have to bring back down the liability. We have to say, okay, as of today, how much of my liability will be left if I have to pay 1 lakh for 3 years. So we are saying remaining is 421,090 minus 267,301. Remaining, we are saying remaining liability is 153,788, or the liability reduction, not remaining, reduction in liability is 153,788. Reduction in liability is 153,788. Okay. Reduction in ROU asset, $147,180. So the difference 153,788 minus 147,180, 6608 is the gain. So I think so far there would not be any confusion. Now, instead of saying, sir, my 6% increased to 7% and then I have additional 50,000 and all of that, what we can do is revised liability 150 for 3 years at 7%. At 7%. 1,50,000 for 3 years at 7%. That is my revised lease liability. It's my revised lease liability. Okay. This was what we had calculated. Present value of at 7% for 3 years for 1,50,000. This is 393,647. 393,647. Present value of 150 for 3 years. 393,647. My lease liability currently at 6% is 267,301. The difference is 126,346. 126,346. Now, this 126,346, you will increase ROU asset 126,346 and you will credit lease liability 126,346. But sir, the numbers are different. Yes, the numbers are different. I'll give you the breakup also. Now, this 126,346 is nothing but if you come back to this solution, what we have done, here we took 131,168 credit, and here we said 4,870 debit. Okay, now 131 minus 4,870, if I do 131,168 minus 4,870, if I do, I get 126,298. So basically, what I have done in the revised working, 126,346, there is a slight difference because of rounding up. This way also you can approach. Okay, so this is a more simpler way and easier way to approach. Final impact will be the same, because if you come back to what we have done here, till here it remains the same. Till 6610 you should recognize. Till 6610 you should recognize. After that, instead of doing this step lease liability, gain, and ROU asset, and again ROU asset and lease liability, what you can do is you can combine both of these and pass a single entry. So how do I combine both of these and pass single entry? Present value of lease liability at 3 years. See here, when we calculated the reduction, we have compared 421 with 267 at 6%. So now what you need to do is present value of lease liability at 7% and my current closing balance at 6%. If I compare both of these, I get so again coming back, closing balance as per 6% should be 267,301. We have brought it down to 267,301. Okay, now the 267,301 is at 6%. This is at 6%. Now at 7%, my present value of liability is 393. If I compare both of these, my liability should increase by 126,346. So instead of doing two split, first comparing with 262, then comparing with 267, instead of doing all of that, first step, recognize a gain of 6608. Second step, compare the revised liability with the present value of lease liability which is revised, and whatever is the difference, pass it to ROU asset and lease liability, because ultimately if you see the impact, ultimately here I am debiting by 4,900, here I am crediting by 131,200. So the net impact remains the same. So you can skip this step and directly compare the lease liability which is calculated using 6%, that is 267,300, and directly compare that 267,300, directly compare that with the balance lease liability or the new lease liability, you will get the same answer. I hope this shortcut method is clear. Is it clear? Okay, now see, these are some questions, especially when it comes to lease modification. A lot of time it becomes challenging for us to understand because so many steps involved. So we need to go step by step, and this can be difficult for first timers. So what you need to do is you need to go back and you need to revise. Okay, so that is what is very, very important, because new concepts sometimes it takes time. So especially for first timers who are attending for the first time, please go back and do the question again. Study material sometimes gives it in a complicated way, all text and everything. How are you supposed to understand all the text? So trying to simplify in this tabular format in the Excel what I've shared. I will share the link of Excel in the group, and you can access it from there, so that you don't need to work it back again. What I will also do is, for this particular question, my classroom solution, proper step-by-step Excel what I have done in the actual class, along with the full-fledged solution, if you want to go back and watch it again in a full length, so that also I will share it. Maybe it will take 2 to 3 days time. In the meantime, I'll extract all the modification related question answers from my class, and I will share that with you. That will be helpful for all of you. Okay, so I don't think we have any more time to start something afresh as a concept. This I thought should be given sufficient attention, because it is confusing. It is not that it is easy or it is simpler. So just try to get a grip of this particular two tables. Okay, what do we do when we have to do a remeasurement? Sorry, yeah. What do we do when we have to do a remeasurement, right? So that is one part. And what do we do when there is a lease modification? And in lease modification, when do we account for a separate lease? Sorry, the system is slightly slow. Just a second. Yeah. So this is the table that you need to understand. Is there an increase in scope? Yes. Is the price commensurate? Yes. Then separate lease. Is there an increase in scope? Yes. Is the price commensurate? No. Then you will do the remeasurement. Is there a reduction in scope? Is there an increase in scope? No. Means other cases. There is no increase in scope, but let us say, there is no additional ROU. Maybe there is something like a reduction in term, something like that. Then you will remeasure the lease liability. So we saw a case where there is a reduction in term. So you'll remeasure the lease liability. Then ROU asset is reduced proportionately and difference is recognized in P&L. Right. I hope you found the session useful. Okay. If you found it useful, do share it with your friends. We have completed significant chunk on leases. Now, other than sale and lease back, there is nothing much which is complicated as far as lease accounting is concerned. We will start the balance portion tomorrow again at 5:30. If you have any specific requirement, if you have any specific question, you can put it. You can put it in the chat box, or otherwise we'll catch up tomorrow once again. And thanks for showing up every day at 5:30, because that also motivates me. See, I also need some motivation that there are students who are waiting to join, and I also force myself to get up. Okay. What WhatsApp group, it's there in the description, you can get it from there. Illustration number 28, what is there in that? I think we have covered. So, Archana, were you there? Okay. Why is it assumed that first payment of 10K is not included in initial liability? Now let's read the question. Why X and Y and Z execute a value lease of rail car so and so, lease commence so and so. Entity must pay first monthly repayment 10,000 upon execution of the lease. Then we'll pay 50,000 cash incentive. Okay. So lease payment. Yes. Now why is this 10,000? Okay, Nisha. So you can join the WhatsApp group. The previous 2 days classes are already available in the channel. You can watch it. That's not a problem. Now here the question what Archana is asking is, why is it assumed that first payment of 10,000 is not included in initial lease liability? See, lease liability is always for unpaid amounts. When we say lease liability, it is present value of lease payments to be paid. So if I have already paid at the time of execution, then I will not again include it as a part of my lease liability. Is that clear? Okay, sure. Thanks a lot. Try to solve as many questions as possible from till whatever we have completed, and do share it with your friends. Do join the WhatsApp group. We can share the video directly or the playlist directly, and tomorrow we'll continue from here on. Okay. Thanks a lot. Have a nice day. Take care.